The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Masters Show, folks. Steve Rhodes here. We've got the Dow off 5 points right now. S&P flat, down 41 ticks. Composite up 3. Now, that's a reversal from yesterday. Small caps down $1.50. New York Stock Exchange off 4 points. NDX up 5. Really all about Apple. We're going to take a look at the Apple chart and anything else that you'd like. You can give us a call at 877-927-6648. We've got the DAX trying to break out. We've got the Euro pulling back. King dollar up 33 ticks right now. Gold and silver holding up pretty well considering the strong U.S. dollar index up 33 ticks. Gold is up $1.20 out at $16.94. Gold trading down into an area of support. Silver up 83 cents. That's up about 1/4%. I'm sorry, up 8 cents, not 83 cents. Up 8 cents out at 33.04. Light sweet crude off a buck this morning. Apple gapping down. Let's go take a look at it. Apple trading out right now at 5.39. If you're listening to us on the radio, maybe you're listening with your mobile device, as so many people do. I think we found out that 60+% of the folks are listening to us on mobile-type devices out there. That is a beautiful thing. That means you're using either TFNN.mobi, or many of you folks may actually be watching us on Tiger TV on your device. We absolutely love that. Just go to the homepage of TFNN.com for all of the details there. The archive of this show, if you are listening in, you can catch the archive of this show on Channel 10 out there. Now, Apple this morning gapping down into the hammer candle of the high volume low of November 16th out there. The price spread on that is a high of 530 all the way down to a low of 505.75. Apple's got some volume today. So going to have to really pay attention to what Apple does here, because this will be a good indicator from a market perspective as to where we are going. All Apple having done here so far this morning is closing the gap that it created at the open today. When I say it has volume, just simply in the first 5 minutes of trading, almost 4 million shares. So far today, 13 million shares. Yesterday, what Apple did on the way down with wide price spread, and that candle there from yesterday, that is a type 1. That is the strongest session that you can have. Now, why do I say that? Well, just simply the candle alone, plus the volume that was behind it, you had 37 million shares. However, 37 million shares that were coming into 45 million shares. So Apple could either be just simply giving you a reversal signal today by testing the top of that bar at 530. However, what you'd have to do is you'd have to get a close above 530 and on lighter than 45 million shares. That says that volume inside Apple will have to really hold its horses out here today. You have another high volume bar out there. It'll say that Apple will revisit this area once again in the near future out there. But we'll pay attention to Apple. If I go down into the short-term chart here, maybe you didn't catch the 9 o'clock show. I gave you a great lesson out there. You should really listen to the archive of that show. That show worth its weight in gold, and we will go take a look at gold. I'm not going to go through all of that again. What we can see is Apple having worked off its oversold condition by simply bouncing higher. We know that's one of the outcomes, and really just coming back in, testing the gap, the candle left up the gap, which would be the close of yesterday at 4 p.m. The low there was 538.77. So right now, setting up on just simply a 5-minute chart, setting this up here as a tested area of resistance. So we'll be paying attention to this tested area of resistance for sure. We'll put a nice dark black line out there. Let's continue looking at the markets here. We'll go over and take a look at the DAX first. We'll go over to Germany. That is trying to break out above a swing point. The swing point is September 21st. The high there, 74.7853. I do believe, even if it does close above that, that what we are looking at is a false break topside. Don't know that for sure, but that is what it seems like we're looking at, just simply because of the divergence that we have between the DAX and the euro. If we take a look at the euro, this is a 30-minute chart here. You can see Niagara Falls, meaning the waterfall coming off of the 9 o'clock session, with it moving down. Now, the DAX here on the 30-minute chart moving down into a oversold condition. Let's go put the indicator out here that just simply measures the expansion and contraction between swing points. You love this one. Pesavento patterns out here. You see that the euro has a little bit further to travel in order to get down to the 0.618 level, retracement of the swing point off of the lows on November 28th out there, when the euro was down in the 1.28 level. Let's go take a look at A to B equals CD patterns, and we'll see if this is setting up a Gartley buy. We know that from a oversold condition on a 30-minute chart that it is there. You can see price, though, moving with conviction on the inside track of that C to D leg. That says it really has, and when I say conviction, we're talking about the A to B leg versus the C to D leg, says it still wants lower price out there. You have to wait for a bull to show up. None yet. What does that say? It says really 1.618 is really the next level here on the euro. 1.29, looks like about 1.295, and I can't read the other numbers out here. But let's go take a look at the retracement off of the lows in that November 28th time frame, all the way up to the high put in. Now, what the euro is doing, by the way, folks, this is the second. Of course, this is the largest A to B equals CD down in the euro, coming up off of the November 28th level out there. So that says something, and it says something because it's coming off with conviction out here. You can see that the 0.618 level is very close to where it's trading down to. Looks to me like it will head to a 1 to 2 A to B equals CD, down to the 129.315 level. But all you have to do is really just be patient and wait and watch for the bulls and the bears. They paint signs all of the time out there. Let's go take a look at gold. I did say what I taught during that first hour show was worth its weight in gold, and go listen to the archive of that show. The whole show, even the opening there, most certainly is a lesson that each of us need. If we take a look at gold, the November 5th swing point is where it is trading into. The high of that is 1686.20. What did gold get down to yesterday? 1686. Tested that area, rejected that area. Volume-wise, looks like 197,000 contracts going into 223. Not enough to bust them down. However, one of the things that I talked about yesterday on yesterday's show, using a lagging indicator. A lagging indicator helps you to understand momentum out there, at least from my standpoint, helps to understand momentum. Well, one of those lagging indicators is the 20-day and 50-day exponential moving average. We take a look at that here. Yesterday we had a, did we have the crossover yesterday? We did not. We're getting it here in this morning's trading, so it'll be important to watch how today closes out and trades inside gold. Right now, 20-day is at 1718.50, 1719.80 is the 50-day exponential moving average. Why is that important? Well, again, from a momentum standpoint, and really it's to be used from a momentum standpoint, while you are in a trade out here, we have not seen that crossover. Last time we saw that crossover was, I'll just pull the chart back here, that way you can see it, was right back here on March the 14th. Gold was down in the 1650 range. Of course, gold made it all the way down to test the high volume lows out there on May 16th, getting all the way down to 1526. So it is important. You can see as gold broke off of the bottom, that was really the low on May 16th out there. It tested a high volume low on lighter volume, rejected that area, moved sideways to up, and then really took off. And you can see here again from a lagging indicator, it's not going to give you reversal signals, but does help you with regard to staying in the trade. And therefore, you saw that 20-day cross back through the 50 back in the August time frame out there. And today we're starting to get a little crossover to the downside. So gold holding up pretty well, considering King Dollar is up 40 ticks right now. Silver, though, holding up much better than gold. Gold still has room to run to the downside before it gets into a oversold condition. So we are not there yet. I believe there was a question. There was a question, if I could take a look at Sony from one of our folks in the den. And folks, if you are just listening in and you have not test drove the Tiger's Den, do yourself a favor and do it. Or if you just simply even do yourself a bigger favor, just go over to the homepage of TFNN.com and sign up for our Tiger Dollar promotion out there. Tiger Dollar promotion where you get a 25% bonus on every dollar that you invest in Tiger Dollars. Those are just simply ways for you to be able to take advantage of all of the services that we have here at TFNN, including My Service Mastering Probability. You can test drive that for 30 days for free on the homepage at TFNN.com. You will see a link right under breaking news. It's really easy to go test that out. But our Tiger Dollar promotion, $1,000 or less in Tiger Dollars, and you get not only the 25% bonus, you get another 5%, which is a contribution to the Salvation Army. What a great service to be able to be contributing to. $1,000 or more, it's a 10%. You'll get a letter from the Salvation Army, tax deductible, even if you don't need that tax deduction. What a nice way to be able to touch somebody's life out there as well as your own, just simply by making a good investment. So go over to the homepage of TFNN.com. I believe that runs through the 19th. So, now is the time to act. Let's go take a look at Sony out here. I'm going to have to just use this bar chart. It does look like Sony. Let me refresh my screen out here. This charting package, this system here, for some reason I have a problem if I go change these to candles here right away. I'd have to do this during the break. In any event here, it looks to me like Sony, let me get the volume out here on Sony as well and change a couple things. So Sony here had come crushing down on the 14th with 12 million shares. That low was tested. You're back up above that low out here. Sony has made a very close to making a 1 to 1.272 A to B equals CD down pattern. You did have some volume to the downside yesterday, 2.9 million shares, gapping up this morning with only 584,000. Actually, not too bad considering it is 10:18 out there. Let's go take a look at the longer-term chart here on Sony, because what you really want to do is you really want to find a sign of strength out here. Well, let's take a look at Sony. Tom's chart goes back further than mine. I do believe we are back up against some lows that obviously go back before 1990s. I think it's in the 1980s out there. Let me try the weekly chart out here real quickly for you when it comes to Sony. So Sony, here's what you need to be paying attention to on Sony. So they got that high volume day we mentioned. How about just take a look at the high volume week, which is November the 16th out there. Your low, 977. Your high is 1083. What you want to see is a close above 1083. And whether or not you're going to do it on more than 25 million shares, you'd like to see some kind of sign of strength in a Sony, SNE out there. With the Nikkei having made a heck of a move in the marketplace and Sony not going along, excuse me, tells you there's troubles, at least it tells me, there's troubles in River City out there. So Sony might not be the equity to actually be looking at. 877-927-6648. We've got the Dow off 18 points. When we come back, we're going to go to Mark in Denver, take a look at the natural gas, the ETF for natural gas, UNG, and then up to Rick in British Columbia and take a look at the gold contract. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes here, the Money Masters. We've got the Dow off 14 points, S&P off 2. Let's go out to Denver, Colorado, to our man, Mark. Mark, thanks for calling. Thanks for holding.
Thank you. How are you?
I am doing great. Yourself?
Great, thanks.
How's the winter season shaping up out there in Denver?
Well, if we haven't had snow for a while,
Ah.
and the ski season's not looking so good right now. We've had 60 to 70 degree weather for the last several weeks.
No kidding.
Yeah.
Now, so this is pretty late in the season. So are the resorts open? They're just making some.
They're trying to stay open, making their own snow, but it's probably pretty rough with it being as warm as it is.
Yeah. Wow. Very, very interesting out there.
Yeah.
Very interesting. And therefore, you wanted to take a look at play on natural gas.
Well, I'm thinking if stuff's so unseasonably warm, I'm guessing gas is kind of not. People aren't thinking it's going to be a good investment, but if things turn around, then
yes,
yeah,
probably just takes one big cold snap, huh?
Yeah. So now I guess my overall arching question here is, what's your favorite way to play this? Or I know there's this UNG, there's the GAZ. Are there any other ETFs or companies that you like to play the gas with?
There may be. I like the UNG just simply because of the liquidity, that is inside it. Yesterday 9.6 million shares. But I have not tried the GAZ. Is that the triple?
No, it's just a regular.
It is, okay.
It's similar to the UNG, I think, but it trades for like $3, so it's you can.
Let me pull it up here. Let me just pull it up on my system here. Z is the ticker symbol out there?
Yeah, and then
Okay.
there's a triple. I think there's a GASL and GAS.
Okay.
X or something.
Well,
like
see,
that.
I can answer this one real quickly. I don't like GAZ at all. You know, yesterday was 91,000 shares. To me, that's not liquid enough to, the dollar. The way that I like to trade is just really have you take a look at risk first, and that should be 1% or less on any trade of your total working capital, and then it's just a matter of a math computation. You know, where's your stop, and that tells you what your position size should be.
Right.
So, on UNG itself, I've been looking, because of the seasonality of it, which is meaning that, you should see natural gas, in essence, trade higher through about the March timeframe or so. I myself am looking for a place to get in. And what I was looking for, quite frankly, was a sign of strength. And we saw that yesterday. Now, if we take a look at UNG specific, what we can see here is we can see the rising price channel that it has been traveling in ever since it made the lows back in April of 2012. So it's a really beautiful price channel out there. What the UNG did on last week on the 4th here was it completed an A to B equals CD down. Your A point that I'm using is the high from October 19th. That was at 23.38 down to the low. The B point of November 9th, that was at 20.50. Makes a retracement all the way up to November 23rd. The one-to-one is $20.18, and what it did a couple trading sessions ago got to $20.17. How's that work, Mark?
That works.
So it did it while it's at the bottom of the rising price channel as it was moving towards an oversold condition. Didn't get to oversold, but was moving towards the bottom of that relative strength, which is what you like to see. And then yesterday, a little bit of a sign of strength with 9.6 million shares. Now, obviously, you need to trade this off of the natural gas contract. That's the best way. The thing is, you don't have the same setup inside the natural gas contract. If I look at the continuous contract, what natural gas did yesterday was got to that midpoint. However, in taking a look at the continuous contract, we can see that each time it's gotten down towards that midpoint of the rising price channel, that's where also was reversal. Yesterday, a bullish engulfing on natural gas. So quite frankly, to me, it looks like a pretty good trade out there.
Okay.
You know, the average true range on this thing is 54 cents, I believe. You need to use some expansion of that. Really, I would use on natural gas if you were taking a look at getting into it or maybe buying it on the next little pullback here. You'd want to make sure that your close was below the session of, at least intraday, you want to make sure it's below 2017 just to give it a little bit of room out here. But it looks pretty good to me.
Okay. And then, there's the GAS.
Okay.
GASL, which is like the triple long, and then there's, I think, a GASX, or GasX, which is the triple short or something like that.
Okay.
Those don't trade that high a volume, but,
Yeah, that's the problem. So I do recall looking at these at one point, but liquidity is a beautiful thing.
Yeah.
So again, like I say, this is really trading at the same price point, $21. So UNG is a good vehicle to trade natural gas with.
Okay, great. Thanks.
You bet. Thanks for calling. Appreciate it. Have yourself a great day. When we come back, folks, we're going up to British Columbia. We're going to check on the weather up there, see if it's any colder, see if Rick is going to blow some cold air down to Mark in Denver so we can get some skiing in Vail, in Breckenridge. Breckenridge, what a great place to go, folks. 877-927-6648. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. I'm your host, Steve Rhodes, and the Dow trading off 15 points, S&P off 2. I've got the 5-minute Apple chart on the screen, of course, with all the gaps here lately. We'll just call it Gapple. And what we're taking a look at on the 5-minute chart, we're taking a look at the rise in price off of its lows here this morning. Traded down to a low in the first 5 minutes of trading, getting down to 518.63, getting into the swing point. I believe it's from November 16th out there. Now, what you can see is you can see a nice rise in price. But when you take a look at the volume, with the exception of this 10-minute bar right here, we can see volume has really been more on a decline, where you had price on an incline. That's not real out there. Doesn't mean that Apple can't move higher. But other than this bar that we're speaking of right now, you have seen price move higher and volume move lower. Let's go to British Columbia and our man Rick. Rick, thanks for calling. Thanks for holding.
You know, when you said goodbye to your last caller, the natural gas inventories come out. It was quite a coincidence, actually.
Oh, is that what it was? We just thought it's just everybody listening into TFNN.
I caught off and trade UNG. I haven't lately, but I just know when it's worth having your head up when the inventories come up, because you get some wild moves. You know what I'm saying?
Yeah, absolutely. It's a good looking trade for sure. At least it's a great looking trade from the standpoint where your back's up against the wall. It's in a rising price channel, and so it's a good.
But
trade.
I don't know what your weather's like out east, but I know in Ontario, Toronto, our biggest city there.
Mm-hmm.
I mean, they're like like 70 degrees too.
Well, that's what Mark is saying in Denver. I just don't pay that much attention to the weather. It's not one of the channels that I tune on. So it is pretty amazing considering it's already December. I mean, actually, it's really amazing, isn't it?
Well, it is. It is.
And same thing, I mean, how is your winter season shaping up so far in British
Well, you know
Columbia?
what? I just want to promote our town a little bit. And you just
I like it.
Smithers, British Columbia. Smithers, just like it sounds.
Okay.
And we got a ski hill just above our town, and we've been going for 2 weeks now, and we're inland about 100 miles from the coast, so we don't get that wet snow.
Okay.
The lighter snow,
yes.
Which apparently I'm sure Denver has as well because
so
once
dry
they
out
get
there.
it.
Yeah.
But it's an average size ski hill. Got a chairlift on one side and T-bar on the other. And,
okay, good.
Does the trick. Looking at the GLD.
Okay. I'll pull it up here. Go ahead. Tell us what you're looking at. Are you in it? Are you going long? What are you doing?
Well, I'll tell you what I think is happening. I think I looked at the gold contract.
Yeah.
And the GLD looks a lot like it. And so maybe it looks to me like it's got a little head and shoulder pattern going on a monthly chart.
Yeah.
And I think that would...
Now, it's where it's trying to form the right shoulder now? Is that what you're looking at?
Well, no, actually the right shoulder's been formed. The 28th is the neckline, the 29th is the top of the right shoulder, and the head is, of course, at 170 up there.
Okay. I see what you're looking at.
And I think it's going to target, that's for just under 160. And... what I did was I put the GLD on a 1 year monthly, and we did I believe it was a monthly I did it on. We did a nice big doji candle.
Okay, I'll put it on
you
to
see
a monthly
that?
chart. I'll put it on a monthly chart here. Yeah, last month, yeah.
Okay,
absolutely.
And 5 months ago, we took out 7 months ago the lighter volume. So I think we're going to pull just under 160.
Yeah, there's an ABC down on the GLD, takes you to 158. So that would certainly make, that's just the 1-to-1. That would certainly make a lot of sense. Interesting, gold is holding up really well today. You got the U.S. dollar index up 37 cents right now, and gold's up $5.
Yeah, and Tom mentioned ABX the other day.
Yes.
And I looked at it, in the U.S., it has a high volume low down there at 31. And it can fool you because it's a Canadian company, so when our currency plays around, it can affect price. You know what I'm saying?
No, absolutely. No question. You have to take that into consideration.
But I did look at it in Canada, and it was at 31, so our dollars must have been at par or whatever, which it is pretty well right now. But it looks to me like ABX could potentially go down to about 31. And,
right.
And the gold contract, we know overnight, sometimes, I'm looking at it for about 1660. But that doesn't mean, what, we've all been there when it just gets hammered where it drops $30.
Oh, absolutely.
It could go down to that, like Tom's looking for 16.25, but I don't know if we're going to get that this time. But it looks to me like we'll go to about 1660 and then bounce back up to that high volume day we had on the gold contract. I think the low was 1705 the other day, which would take it back to the neckline.
Yeah.
Right?
Yes. No. Absolutely. I think the the other factor. So it's interesting, as we say, you got gold trading up just a bit, $6 right now. You've got the U.S. dollar index pulling back, and that's really about the euro out there. So I'm not sure what to make of. You trade each chart here separately. If you try to put too many things into it, it's easier just really to focus on the existing chart. So gold needs to break through just simply from a volume standpoint. It's got to break through that November 5th swing point for sure. But it does seem as if the euro is certainly pulling back here. Right now you've got the euro pausing a bit because on the 30-minute chart it just simply had gotten into the oversold area. So that would then all of a sudden say, okay, you can see where gold would pop from here. But it does look to me, I'm in your camp where I expect that you're saying the 160 area, 158 on the GLD, I think is game on ABX at 31 level. That's a high volume low. The top of that candle was tested, but it looks to me like really the bottom of that candle would be the better trade setup.
I agree.
And so we'll just have to wait to see how this plays out. I would like to see an A to B equals CD down pattern finish in gold. I'd like to see the euro move towards, finish its retracement before I would go ahead and take a long position in gold.
Yeah. Okay. Well, you take care, and
you bet. And so we can officially tell Mark in Denver that you're gonna send a little bit of cold weather out to Denver, get those ski resorts going.
I do feel sorry for those people that are in that business because, man, oh man,
yeah,
it's just like farmers. I mean, what's the weather going to be like? There's huge investments in these ski villages, and
absolutely.
And I mean, oh my Lord.
I think one of the most beautiful sights, in the world is getting to the top of a mountain and looking back at the village. I mean, there's, you just got to put up with the cold, then it's skiing back down to it. The chalet area. To me, it's just on a clear blue sky day, there is nothing more beautiful in the planet.
Yeah, no, you're exactly right.
Yeah. Hey, thanks for calling, Rick. Have a great day.
You bet, bye.
All right, so folks, as we come back to these markets here, let's take a look at things moving to the upside and to the downside. So you got Apple up $5 right now. Athena Health is up 7%. High Tech Pharmaceuticals, let's go take a look at that. That is up 14%. HITK is the ticker symbol. Let's see if they are out with earnings. Looks like they had a profit here, Q2 profit of $57 million versus $56.9. Let's go take a look and see where this is trading into. Again, High Tech Pharmaceuticals, HITK is the ticker symbol here. So moving up with wide price spread. Let's take a look at the volume behind it. So it's moving into an area where it most recently gapped down. That takes you back to September the 4th, where it moved down with 980,000 contracts. Might not seem like a lot, but this doesn't trade a tremendous amount, 87,000 contracts normal. So it's running into an area here of a previously tested area of resistance. We'll see if it's going to go ahead and repair and fix that window. In order to fix that window, needs to close above $35.45. Again, that has 118,000 shares at that swing point. It's already done 144,000. Should repair that window and at least go test the highs, 36.60. Let's go to Kathy in Cambridge, Massachusetts. Kathy, thanks for calling. Thanks for holding.
Hi, how are you, Steve?
I'm doing great. Yourself?
Not bad, thank you. I just been out working and decided to just open my trading platform today, and so I must have missed this Freeport McNamara drop yesterday or the day before. What happened now?
Yesterday, they purchased two companies out there. They're actually getting back into the oil and gas business as well. And McMoran Holdings and I forget the other name of the other company out there. But yeah, this thing here is just one of those stocks where it just absolutely, after the buyout, just simply fell out of bed, and with volume extraordinaire. You're talking.
It doesn't seem like it's busting the lows, from like July of 2010 and October of 2011. It seems to be holding pretty tight, with that downdraft from 08.
Yeah, it does. And, certainly on the, if I just put up the monthly chart, the area that, it has moved down to before, the approximate range you could kind of say is, as you're saying, July 2010. You certainly would not want to see this close below 28.35 out there. It tested that area in October of 2011, as you're saying. That low was 28.85. Hasn't made it down there yet. Looks like it's going to bust through the July 31st, 2012 level, which is 31.08. It's at 31.03 right now. So it looks like it's going to break through that, and it's going to probably come back and test. And now what you really want to see on this is the high volume low, or the high volume candle, I should say, on the monthly chart, really is at October 31st, 2008. And so ideally it would hold $28.38, 1.3 billion shares down there. If it closes inside that, that's not a good thing, for sure.
It went under that in November and December of 08 on less volume. came out.
That's right. Yeah.
What's the dividend on this thing now? It must be a pretty high yield at this price.
I don't. My system wouldn't update that quickly. So Bloomberg most certainly would, but I'm not paying $2,000 a month from a Bloomberg service. so I've got Bloomy Jr. out there, and they're just not that quick to it. So I apologize for that. But I know this was looking like a good setup. Most certainly on the daily chart. Let's see, on the daily chart, this thing came down and tested the gap up on from September 6th. Now that had 17 million shares. When it came down with 21 million shares. That was a bit of caution, but it was really being benchmarked against 39 million shares. But, when company, and what they're really trying to do, look, they're trying to expand their business and get into, I think at one point in time in their past, they were in the oil and gas business. That was one of the other things, I believe, that made natural gas jump yesterday. So that's why, we were taking a look at the natural gas contract and the UNG. And so seeing that, I was really waiting for the natural gas or UNG to actually pull back and just try to measure how much of yesterday's move might have been as a result of the Freeport McMoran deal out there. But you got major volume and a lower low today. I don't know what to do.
Well, that's a pretty, 28.50 from, what is it now, 31? That's not a bad R&R.
No. Yeah. This thing here, what's always interesting is stock chart patterns that are out there. And this did make the real big cautious sign in Freeport McMoran. And, what is so amazing always is when you take a look at a stock chart and where the chart itself gives you piece of information, whether it's to be cautious. And that was the island reversal candle from September 14th. September the 13th or 12th, let me see, it was the 13th of September. The high was 42.18, gaps up. The next session low is 42.56, and then it goes ahead and it gaps down. That high was 42.52. So just a small gap, 4 pennies out there. Yet that still was a gap. It was an island reversal. You can see even when it moved up on September 14th, the bears were the ones who came in and took control. When you see a gap up like that, that's not the type of signal that you're looking for. And how is it that the stock chart September 14th was saying, be really cautious here? Amazing, isn't it?
It is.
Now, maybe you'll get an island bottom. Maybe you'll get an island bottom reversal tomorrow. Maybe you'll get a little hammer candle today. That would be nice. And then you'll get a gap up tomorrow, and then you'd have a island bottom put in. And that would set up one heck of a trading range from the 30s all the way back up to the 43 level.
Yeah, because it's going to be a lower volume day today.
Yes. So that's a little prayer that I'll send off to you.
Yeah. Well, I'm not in it yet.
Oh, okay, good. Okay.
I'm not in, I was in it a few weeks back, but I get out.
Okay, all right, good. Okay. Then I say stay away. I say go look for something else, unless we get an island reversal here.
Okay, great.
All right. Take care. Good to hear.
Have a great weekend. Thanks.
Okay, you too, Kathy. 877-927-6648. Dow's up 19 points right now. Composite up 15. That must mean Apple's on the move. Up $8 right now. We get back from this next break. We'll go out to Greenville, Michigan, to Allen. We're going to take a look at the Qs out there. That means we're also going to be taking a look at Apple. 877-927-6648. It is Thunderous Thursday. Terrific Thursday. Hope you're having a great day, folks. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back to the Money Masters show, folks. Dow up 17 points, S&P's up 2. And, as we do on Thursdays, normally we'd have Basil Chapman following this show from 11 to 12, but he is doing a Master Trader series today and tomorrow. We're going to replay the 9 o'clock show. So if you didn't hear the 9 o'clock show, I gave away lessons worth their weight in gold out there. You can listen into the replay of that, or you can catch the archive on Channel 9. From 12 to 1, we've got Larry Pesavento, so you want to tune back in for that as well. Daryl Martin, 1 to 2, David White, 2 to 3, the Ken Shreve Show from 3 to 4, and Tom O'Brien from 4 to 6. Let's go up to Greenville, Michigan, to Alan. Alan, thanks for calling. Thanks for holding. How are you today?
Doing good, thank you.
Where's Greenville? I'm not familiar with Greenville, being a Michigan native that I am.
Kind of near Grand Rapids.
Oh, okay, great. Did you grow up in that area?
No, not. I'm a transplant.
You are? Okay. Where'd you move from, and how'd you get up there?
Came from South Carolina.
Oh, okay. I could sort of hear the accent there, so that's great. Well, how is Greenville? Good place?
Great place, great place.
Oh, that's wonderful. How'd you, how long have you been listening to TFNN?
Probably a year or so.
Oh, how'd you come across this?
Probably just internet searching.
Oh, that's great. We like that internet search and stuff, and we appreciate you being part of the Tiger family. You wanted to look at the cues. Tell us how I can help you, what you're doing.
Well, I'm looking at a weekly chart.
Okay.
And it looks like that this week, now not including the wick of the previous week, but it looks like that this week may want to engulf the previous week minus the wick.
Okay.
And also, I like to plot a 2 and 7 day moving average on a weekly chart.
Okay. All right. Let's go ahead. I'll go ahead and do that with you, and I'll follow along. And so you use 2 and 7 period. Do you use exponential or do you use simple?
We changed that to a 3.
3 and 7.
A 3 and 7, and the.
And are you using simple or are you using exponential?
Just a simple.
Simple. Okay. All right.
And the simple has crossed down through.
Yeah, I see that.
7 day.
And not really day. We'll call it periods because that's really what it's. That's really what it's doing. Yeah.
You know, the money flow is ticking up, but the stochastic has rolled over.
Okay.
And I just want to I'd be happy if I could guess the general trend.
Okay. Well, so you talked about the candle itself. So if we go back to the candle on a weekly chart out here, if you do get a close below the open of last week, that would be 64.77. That would be a bearish engulfing candle. Otherwise, right now on the weekly chart, it's really kind of a draw because you're really trading in the middle of the session. So it bodes well with your statement. You'd really like to get a feel for the direction of the market out here. You and many others. And so. At that stage, the information for this week is totally inconclusive here. Now, using the moving averages, they certainly help you with regard to, from my standpoint, staying inside a trend, making sure that the momentum is really in your direction here. So, you haven't gotten the reversal sign on the weekly chart to the downside in the Qs, even though you have gotten in this case here, you'd have to say, using your system here, that the trend is up, right? Because you've got let me put it up here, use 3 weeks. The 3 week cross back through the 7 week, is that right?
Yeah, well, it crossed down this week, so the trend...
So I showed the 3 week, I actually showed the 3 week crossing up. And we're short on time. I wish we weren't. Alan, do me a favor. Give me a call back tomorrow on the 9 o'clock show if you can. Or some other time when you've got a chance and would love to spend some time with a Michigander. Have a great day. I look forward to speaking to you again. Folks, stay tuned. We're going to replay the 9 o'clock show out there. Have a great